Hello, hello, hello. Hello, hello, hello. We've seen a pretty vicious bounce from the June 18th low in crypto. And I guess the question right now is, have we bottomed? Is it time to go risk off, risk on? I mean, to be honest, like nobody really knows, but I'll give my takes on how I'm viewing the markets. And first of all, like, if you can hear me, just let me know. I'm still trying to get used to the streaming thing. But first, before I talk about crypto, this is a crypto channel, so I mostly focus on crypto. But because crypto is so damn correlated with equities, I do think it's important to track whether or not equities have bottomed. And I want to use this level called 4231. And I'll talk about why that's so important for me. And you know what? Let's kind of get into it. Let me make sure that everyone can hear me. Okay, so similarly to the last stream, I'll mostly do the whole presentation in the first 20-30 minutes, however long it takes. I'll probably take 1 or 2 breaks in between, answer some questions, and then after that we can just kind of shoot the shit and just do some live Q&A, talk about whatever topics you want. But first of all, I just want to get through the presentation so you kind of know how I view the market and how I view various ecosystems. None of this is financial advice. So what's so important about SPX 4231? So to understand that, I need to first share this video, this interview between Jonathan Krinsky and David Keller. So I'll just mute my mic for like a minute and let him show this video clip, and then I'll talk about how I interpret this and relate it to how I view crypto. Okay, so 1 sec.
Yeah, so we maintain a pretty cautious view, but I think, as you mentioned, it's important to kind of have some levels where you might have to question that view. And we took a look back throughout history, and what we found is that once you've had a drawdown of 20% or more on a closing basis for the S&P 500, you rarely, if ever, we can't find any instances where you've actually exceeded the 50% retracement of that decline without having already put in the final low. So what does that mean? It means if we were to take out 4231, that's the 50% retracement of the entire decline thus far, the bear case would be pretty tough to defend historically, because we've never seen that before, where you've had a 20% drawdown, reclaim 50% of that decline, and then went on to make new bear market lows. It just hasn't really happened. So I think that's a big level from our work. It also kind of represents some meaningful prior support, now resistance. So that would be pretty impressive if the bulls were able to take out that level.
All right, so I thought that was pretty interesting. Historically, this guy, he's a technician. He studied all prior bear markets in the SPY, and whenever there, if you take all instances where the S&P fell over 20%, and once the markets bounced and reclaimed the 50% retracement level, in history, we've never revisited those lows, right? At least in the stock market. And that level is 4231. And I was kind of hoping we'd get there today. We almost got there. It's like what, like 21 points away, right? This is a level I'm watching, and I'll talk about like why it's so important. For me personally, I think crypto capitulation has already happened. Back in May, Luna went to zero, which led to the Rieros, right, defaulting on all their debt, going to zero, which let the Celsius go to zero, which also let a bunch of other companies go to zero, right? And there was a forced liquidation level across the entire crypto industry. So if that wasn't capitulation, I don't really know what is. I guess there could be some black swans of Sailor dying, and he had in the MicroStrategy decides to sell BTC, like Satoshi comes back, or there's some bug in the code, right? Or the merge fails and the ETH goes to zero. Yes, those black swans could happen, but assuming that things are humming along, I do think that if the legacy markets don't put in new lows, I think the crypto markets will also not put in new lows. And the 4231 level is really, really important in how I view the markets, because I'm not going to go against history. If we close above that, then it's a pretty good signal, and it's it's a pretty it's a pretty good signal, and the chances of the market bottoming, right, for the S&P increases significantly. And of course, macro is scary, right? There's always FUD, like macro. Oh my God, like inflation's so high, Fed is gonna keep raising rates. And though the CPI was lower today, they're still gonna raise rates, right? I think the market priced in a 50 basis point rate hike in September, not 75 basis points, but inflation is still 8.5%, right? CPI. Back in March of this year, we saw 8.5% CPI and everyone was panicking. And today we saw 8.5% CPI and everyone's like celebrating, right? It's like, oh yeah, like it's down a little bit. This is a crypto channel, so I don't really focus on macro, but I do think that this is important because if the stock market doesn't put in new lows, I do think crypto has bottomed. And I'm not discounting, I'm not saying that the markets are going to go like up only like this, right? I'm not saying that. What could definitely happen is, let me close this out. What could definitely happen is something like this, where maybe we close around here, we maybe get like 3,800, but maybe we just like go range bound here for the rest of the year, and then in 2023 and beyond, we can potentially get like SPY 5K or something. And I feel like in that environment, crypto will outperform, just because crypto just led the entire nukage, right, across all risk assets, with the largest VC hedge fund, whatever, the arrows going bust. And if you think about the amount of sellers left in terms of like big institutions, I feel like the majority of the forced selling is over. So if the S&P closes above 42.31, I'm going to be viewing every single dip as a buying opportunity. And of course, this could be the first time like in history where we poke above it and we just like revisit the lows, and then I'll get wrecked. But I feel like in this market, you can't just assume that it's going to keep going lower. You can't assume that it's going to go up only. I feel like you have to have some plan. You have to have some set of rules where you say, if this happens, I'm going to add more, right? Even though I've been bearish, if this happens, I have to add more risk. Or, on the other side, even if I've been bullish, if XYZ things happen, I have to sell. So that's kind of how I'm viewing it, because I think crypto capitulation has already happened. And given the the history behind this 50% retracement level, after the market has pulled back 20%, that's kind of how I'm viewing the markets. And if you think about entering new positions right now, you can argue that maybe it's not worth buying right now, just because if you kind of vibe with what I'm saying, you can just wait until the S&P closes above 42.31, right? And if it goes lower, then maybe it's good to revisit my line of thinking. But right now, I'm not really buying. I actually put on a little short yesterday, which is kind of down, obviously. But I'm totally okay with that. And once the markets close above 42.31, I'm going to be viewing every dip as a buying opportunity, even though there's a lot of FUD. But this is like my line in the sand in terms of how equities are correlated with crypto. Of course, there are crypto native fundamentals I'm watching, right? And whatever the market does, if some projects are doing well, if the fundamentals are improving, even if price goes lower, I will still buy those things. But generally, I think this is like a good way, or the way I'm viewing the markets in terms of risk on, risk off, and just really viewing this 42.31 level, right? Because this rally has been really, really strong. It's some people are sidelined, some people are overexposed. I will still say there are many reasons for concern. So let's kind of go over that. There's macro concerns, obviously, but I'm self-aware enough to understand that I don't have an edge in macro, right? Barely any people have an edge in macro. So I think it's good to know that there's macro FUD, but I think it's more better to focus on what you can control, and having creating your own plan, despite whatever you see online, and and forming independent thinking. One concern I have is the weakness behind Optimism and Lido, the rate of token price. I kind of mentioned these projects in my last live stream, but I think it's important to track how they're doing, just because they were the leaders out of the June 18th low, right? Lido and Optimism benefited from the liquid staking derivative, layer 2 narrative, and they've outperformed the entire market since the bottom. And one thing, I don't really do TA on this channel, right? But I do look at momentum indicators like the RSI, just because crypto is mostly a momentum-driven market, and both OP and Lido put in something called the bearish divergence, where the price put in a higher high, but the RSI put in a lower high, which means that yes, price did put in a higher high, but it did so on less momentum. And if you backtest this, it's a pretty good top signal. It doesn't mean that it's down only. It could just mean that we get some minor pullback. But I feel like it's a bad sign that the two leaders coming out of the June 18 bottom is putting in weakness. I feel less inclined to say that this is bad for Lido because you can make a fundamental case for why Lido is undervalued. Once the merge happens and once people are able to redeem their staked ETH for ETH, Lido can significantly reduce their emissions because right now Lido pays LPs for the staked ETH LP pair, right? Because they want staked ETH to trade roughly at par with ETH. But if people can redeem staked ETH for ETH after the merge, 6 months after the merge, then they no longer have to give out Lido incentives to incentivize LPs. So I think forward looking, I think those are huge catalysts. But for OP, I think looking at this is really important just because no one that I know is buying Optimism because they like the valuation, right? Like nobody's buying that, right? Like nobody is buying Optimism for utility. Most people are buying Optimism to speculate on the layer 2 season, whatever is big green dildos and whatnot, and also just to speculate, right? And also if you want to farm on the Optimism ecosystem, some farms require you to buy OP, right, and pair it up with ETH or something to farm whatever governance token, right? So there's two sources of demand: it's speculation and demand to farm within the Optimism ecosystem. So if Optimism is showing weakness, could mean a few things, right? Could mean that risk appetite was weakening ahead of the CPI, signaling a potential dump. That's like the most pessimistic way to view it, right? And this could still happen, right? Even though the markets are rallying. But it could also just mean that the Optimism and liquid staking derivative hype has peaked and it will underperform other coins from now on. So that's kind of how you can view it. The former is more pessimistic and the latter is more optimistic, right? No pun intended. I think it's more likely that Optimism is like losing steam. I think I'll talk about Optimism and Arbitrum later, but I think the Optimism ecosystem is fairly valued. I'm not that particularly excited about Optimism. I don't think that ecosystem is like that great. Lido, I think you can actually make a fundamental case for. So I'm not going to say whether or not it's fairly valued. To be honest, I have no idea. But that's kind of how I'm viewing the markets. And lastly, the other reason for concern is that I shared this before too, but every time I upload a video, I'm like losing subscribers, and maybe like my videos are like pure trash, right? Or maybe I'm like some asshole that like people like hate seeing my face, which I totally understand, right? I mean, people tell me that I have a punchable face. Just kidding. But I feel like this is not good, right? I feel like this is not good. And you can argue, or some people on Twitter have argued that this is good because retail is leaving, so it's a buying opportunity. I mean, technically yes, but in order for prices to go up, in order for people to care about crypto again, there has to be more people entering the space than leaving it. I compare this with May, or like 12 months ago, right? Because obviously we had a dump in May last year, and then we had like a 3-month bear market, but my metrics were still super strong, back in 2021. Partly because inflation wasn't a thing back then, macro was not a big deal. People felt like crypto would recover, which it did. But I feel like sentiment right now is much worse than it was last year, even though we're roughly at the same prices, right? Because if you think about it, like we're roughly at the same prices compared to like 12 months ago. And this was the time to start, like the market started to pump. And I don't really expect that, but I think it's important to like track these things. Just the lack of retail interest, which I think is important. Okay, so let me just pause this and answer some questions. Let's see. Okay, I'm just gonna keep going because there are no questions. So with that, this is how I view the markets. Yeah, you don't have to listen to me, but I'll go over how I view my portfolio and how I view the markets and how I plan to manage my portfolio in the future, right? And in terms of buying things, selling things, and risk management. And I kind of want to talk about the mentality of this idea of selling in a bull market versus a bear market. Because yes, selling is important, right? Taking profits is always important, but I feel like you have to separate out this concept of selling, at least in my opinion, right? You can argue that I have a higher risk tolerance than most people, so you can, you can view it that way. But generally, in the bull market, right, you buy some altcoin, right? Buy first, read the white paper later. It's like pumping. You buy it, and it's generally recommended that you should sell like during euphoria and the pumps, right? That's generally what people say in a bull market, right? I mean, it's easier said than done, but that's kind of how people play these things. But in a bear, I'm less inclined to sell these rips because for me, everything is down so much, right? 80, 95%, 80 to 95%, everything is down so much. And of course, most things are going to go to zero, right? They never found product market fit and they're just going to like wither away, right? Into the depths, right? The founders will dump on you, right? The investors will dump on you. But there are some projects which I do think have fundamental value, which I do think found product market fit, which I do think found competitive moats. And I think it's reasonable to expect those projects to get back to its all-time high and, you know, hopefully take me to Valhalla. I've talked about GMX and FXS before on my channel, and I know those two projects are, you know, something that I'm bullish on, which I do expect to hit all-time highs. And, you know, I didn't really buy FXS at like $5 to sell at $7, right? That's kind of not the point. I bought FXS to ride to all-time highs, and I'm totally okay riding through all the volatility. I'm totally happy to hear all the FUD, whatever. But, you know, I bought FXS for a reason, and, you know, I'm willing to see my thesis play out and hold through the volatility. Because if you think about, you know, people that did really well in crypto in 2018, 2019, that bear market, yes, some people that, you know, made it big are just pure traders, right? They just like flip Bitcoin, flip the ETH, and, you know, they just like, you know, slowly kept their stack and they were able to cash in during the bull market. But I feel like the majority of people that have made it in crypto are just people that built conviction over their bags during the bear market and just rode the entire pump, right? Like, for example, SNX, AAVE, Link, right? People that bought those in the bear market and just held, right? Despite the crazy pumps, despite the crazy dumps, were the ones in hindsight that did really well. Of course, this kind of thinking is open to selection bias because we hear the success stories of Link Marines, you know, being super rich, you know, people that bought SNX during the bear market, super rich, people that bought AAVE or ETH back then that got super rich, right? We hear all these success stories, but we also don't hear about, you know, the people that bought like Raven coin or like barbecue or like whatever, these coins, right? That trended to zero. So maybe it's too egotistical of me to assume that I can pick out the winners, but I feel like I spend so much time in the markets that I feel like my edge is in more fundamental analysis than technical analysis. I'm like an okay trader. I feel like my edge is like understanding where capital inflows, capital outflows, right? Like writing trends, not really TA. And, you know, I'm just going to bet on myself that the research is good. And I'm going to keep continuing to, you know, buy coins slowly over time and just not sell, right? Just not sell. Diamond hands mentality. So right now my mindset is to accumulate mid to long-term bags, so 2023 and beyond, with diamond hands mentality while still tracking KPIs. If the fundamentals deteriorate for a particular project, yeah, like I should sell. But, you know, if the fundamentals are improving in, you know, the KPIs, the key performance indicators I'm watching, then I really don't see a reason to sell, right? I'm just going to ride through the volatility. But, you know, what about hedging yourself to the downside, right? Because if I never sell, then like I could get wrecked, right? I could totally get wrecked. So I'll talk about some hedging tools that I mentioned earlier that I use to manage downside and the way I view it. So yesterday, obviously this didn't turn out well, but I felt a little bit too overexposed, right? Like I was just like, I had like some like I'll talk about it later, but, you know, I had some altcoins. You know, I had like 23% cash, and I was like, man, like ahead of the CPI, ahead of the Goerli Testnet merge, like I feel a little bit too overexposed. So I did the following, right? I borrowed Avalanche on AAVE and I bought GLP. And I'll talk about why, but the idea is that I bought these altcoins, right? Like FXS, GMX, CVX too, and just like riding through the volatility, but they might have gone up, but I don't want to sell them. So what I could do is, instead of selling the altcoin bags that I have high conviction on, instead I can just hedge by shorting or hedging via the majors or an L1 coin like Avalanche. It is my view that I don't think these alternative L1 tokens can have any sustained increases in value in price until ETH mainnet fees are sustainably high, right? ETH gas fees peaked at like roughly 70 GUI today, but, you know, it's not stopping ETH gas from going back to single digits next week, right? I feel like alternative L1s can't really pick up until ETH gas fees are above 50 for, let's say, 2 to 3 weeks. Because the reason Alto L1s did so well is because ETH gas fees were so high, right, throughout the entire bull market. So there was a lot of demand for block space, and people said, you know what, like screw it, Ethereum, right? Ethereum abandoned its users. I'm going to go on Avalanche. I'm going to go on Solana because I can actually transact on these networks. That's still the case, right? Right now, it's like $10 to $20 to transact on Ethereum, which is not cheap, but by historical standards, like it's pretty cheap. So the majority of activity is happening on ETH, and there's not that much activity happening on other L1s. I know Avalanche transactions are picking up, but generally, I don't think that's enough to really have Avalanche like lead sustainably, right? I don't think it's reasonable to expect Avalanche to outperform ETH in the next 1 to 2 months, especially ahead of the merge. That's my own personal view. It doesn't mean that I don't like Avalanche. I have a bunch of capital on Avalanche. I use it almost every day. I love farming on Avalanche, right? The AAVE incentives are really great, but that's kind of how I view it. And just hedging my bags with shorting Avalanche, right? It doesn't have to be Avalanche. You can short Phantom or something, really. It doesn't really matter. So what I'm doing is I have some collateral on AAVE, right, on the left side. By the way, like right now you can get paid to borrow Tether, which is kind of cool. But I borrowed some AVAX and I bought GLP with it. Those that understand GLP doesn't really need an explanation, but to explain it simply, I borrowed Avalanche and I bought this asset, which is composed of roughly 50% stablecoins, 25% Bitcoin, and 12.5% Ether, right? So I essentially sold 87.5% of my Avalanche bags and bought these assets with it. So if Avalanche underperforms GLP, then I make money from the hedge because my GLP value is worth more than the amount of debt I borrowed. Of course, if Avalanche outperforms GLP, then I lose money on the hedge, right? Because Avalanche is worth more than the GLP. However, I really don't care because if Avalanche is going up and outperforming GLP, then that means the rest of my portfolio is doing well. So this is kind of the idea of capping your upside, but also minimizing your downside. And I'm more than happy to do this. And also, GLP yields are amazing. I get to farm more Avalanche, so I can use the fees that the protocol is generating to repay my loan. And also, I get to farm more GMX, escrow GMX. And GMX is one of the best performing assets right now, so I'm more than happy doing that. That's kind of the mindset that I have. So strategy, right? Simplifying it, focusing my longer term bags on ETH-native plays. So that's just Ether, right? Just spot Ether, mainnet DeFi, and just L2 plays, not sell, right? Unless the fundamentals deteriorate. And if I feel, iffy about how much stablecoins I have, or if I feel too overexposed, I'll just short the majors or Alt-L1 tokens. You can do this on exchanges, but for me personally, I like to operate on chain. I don't like to use exchanges. Aside from offboarding, onboarding, fiat onto crypto. So you can either do this for GLP, TreasureDAO, or it's like just pure Avalanche USDC liquidity pool pairs. That's kind of how I view it. And like maybe it's good, maybe it's bad. But I feel like this is like a farmer's mentality to hedge your bags, right? You borrow an asset on a money market using your loans, right? You're using AAVE the bank, and then you like buy a more volatility muted asset. So you hedge both sides. So yeah, let me just get through the section and I'll go over the questions if anyone has any questions. But I've been thinking about this a lot, and I feel like I've been talking about GLP for the longest time on my channel, right? There's not that many good farms in crypto right now, to be honest. So I'm not really like farming that much, to be honest, aside from like these Avalanche rush incentives and GLP and like some other farms. But like generally, I'm more looking for like capital appreciation plays. And I was thinking, GLP is so good, and TreasureDAO is also really, really good. I think TreasureDAO is so underrated as like a tool to just DC into the markets, right? You get the majority of exposure into the majors, and you also get to earn fees, right? It's pretty great. And I was thinking, how Bitcoin and ETH maxis kind of denominate their portfolio in Bitcoin and Ether, right? Like I feel like Bitcoin maxis get a bad rap because the maxis on Twitter are just so cringe. But I know a bunch of maxis that understand that, okay, like, DeFi is kind of cool, but I'm going to like flip these altcoins and then take more profits into Bitcoin, right? That's kind of how they view the markets. And a bunch of other ETH maxis do the same, right? Like a bunch of ETH maxis I know bridged to Avalanche and just like farmed and dumped Avalanche when the Avalanche rush incentives were live. So the way I think about it is, like, I'm not a Bitcoin maxi, I'm not an Ether maxi, right? If anything, I'm like a DeFi maxi because I do think that DeFi has product market fit. And I feel like if I am a DeFi maxi, then does it make sense for me to just denominate myself in USD, Bitcoin, Ether? I feel like it's better to denominate my portfolio in GLP and Tricrypto. And I'll kind of go over, why I thought this. I feel like I popularized this collateral farming strategy back in the day where, with these AAVE incentives on Polygon, I'm like, all right, just bridge Ether and just like, loop your strategy, like, farm a bunch of MATIC. It's going up anyways, right? And same for Avalanche. So, this collateral farming strategy was really, really good, right? Where you can use like Bitcoin, Ether, stablecoins as collateral, borrow assets like stablecoins and farm with it. And during the bull market, that strategy was doing really, really well. But given that yields have dried up so much, I feel like this collateral farming strategy is less attractive. And if this strategy is less attractive, I feel like I have less reasons to hold Bitcoin and Ether as money, as hard collateral, if I can't just like use my spot bags to, farm, like borrow against it and farm. And then I was thinking, okay, like if I can't do that, if I don't want to do that, then, like where do I park my capital? And I'm not that type of person where, I'm going to hold Bitcoin forever. To be honest, like I'm never going to have 0% Bitcoin. I'm always going to have Bitcoin. I started out crypto as a Bitcoin maxi, it's like the rite of passage, right? Like I feel like everyone enters crypto as a Bitcoin maxi. They hate ETH for like 4 months, and then, okay, it's like ETH is pumping, let me look into Ether. Oh, ETH is kind of cool, let's get wrecked in DeFi. Oh, I got rugged. Oh, but it's kind of cool. And then over time you slowly get into this rabbit hole of Bitcoin to Ether to DeFi to just altcoins in general, and that's definitely me. So I actually sold some of my Bitcoin for the first time like 1 or 2 weeks ago, which was kind of a big moment for me. And I'm in this mindset of, what if I just, instead of holding Bitcoin, like what's the downside of just holding TreasureDAO or GLP? Of course there's smart contract risk, but I feel like there's not that many scenarios where GLP or TreasureDAO underperforms Bitcoin in a big way in this type of market environment, right? Especially with the merge coming. There's the Goerli Testnet merge happening in roughly 7 hours, I think. So if that goes well, then the merge should happen mid to late September. September 19th is like the day that the heat max is saying. And also, I think the Arbitrum token, whenever it does drop, is going to bring a bunch of capital onto L2's. So with a bunch of these catalysts and the lack of catalysts for Bitcoin, I just feel like Ethereum has more mindshare than Bitcoin. It has more catalysts. The merge is going to be bullish. And if that's going to be the case, why am I overweight Bitcoin, right? Not that I'm overweight Bitcoin, but I've historically been this overly overweight Bitcoin. And I feel like, people say that, Bitcoin has to lead in order for the bear market to end, but I don't necessarily think that. I feel like it's lazy thinking to assume that, it happened in 2018 and 19, so it should happen again this year, right? Because you can't, like back in the day, Bitcoin of course led the markets from the bottom because it was like the only legitimate asset. Ethereum, like ICOs, scam, like whatever, right? Like so much bad news, and it was unproven. But I think at this point in 2022, I think it's pretty clear that Ethereum is here to stay, and it did find product market fit, right? With DeFi, with NFTs and whatnot. So what is the probability that Ether can lead us out of the bear market, right? It's not 0%. Is it 20%? Is it 40%? I feel like the general market is discounting that. I feel like the majority of people still think that, Bitcoin has to lead. And of course, I want Bitcoin to lead, right? I want Bitcoin to do well in order for the rest of the crypto markets to do well. But I think it's flawed to just assume that Bitcoin has to lead 100%, right? If Bitcoin doesn't lead, I'm not going to buy crypto because it's a scam. Everything is a scam. Even if the probability, if the market, let's say the market as a collective views, the Bitcoin has to lead idea like 90%, with 90% certainty, right? Even if that probability reduces like 70%, I feel like there could be more of a bid in Ether. I could be wrong, right? Maybe I'm just like Ethereum outperformed Bitcoin for like 2 months, so like I'm like doing some hindsight analysis, but that's kind of how I view it. And given the macro uncertainty, I feel like Ether should generally outperform Bitcoin over like a multi-month time horizon. I feel like GLP and Tricrypto are just better holds than spot Bitcoin. And that being said, I think I'm going to slowly migrate my Bitcoin towards Tricrypto. I have a bunch of Bitcoin on the Algorand, the Algorand chain, because the yields there are like pretty good actually. So if those yields dry up, I might convert that into Tricrypto or GLP. Right now, I can farm a bunch on Algorand, so I'm just doing that. But the point is, like, I'm not recommending that people should sell their Bitcoin for Tricrypto, right? Because there are smart contract risks and whatnot. But more, the point is, GLP and Tricrypto, great way to DCA in and DCA out of the markets, right? And also a good instrument to hedge. And if you're looking to buy altcoins right now, if you can't outperform Tricrypto or GLP, then you're probably just better off buying Tricrypto or GLP or just sitting on your hands. And I feel like one question you should always ask yourself if you're like buying something is this a better buy than GLP? Is this a better buy than Tricrypto from like risk reward basis? And I feel like the majority of the time, GLP and Tricrypto is better. I don't want to like, convince people to like not buy altcoins, right? Because some altcoins are like, pretty cheap right now. But that's kind of the mindset that I have right now. And lastly, before I get into the Q&A, I know that people are, feeling down, right? Markets are down. And to be honest, like I'm doing a lot of research, right? I'm like, still doing this full time and whatnot. And let's say you research crypto for like 100 hours this month, right? Like you just like put your head down, you like look for opportunities. But the thing is, there's probably not going to be that much instant gratification, right? 100 hours of research may not have instant payoffs, but I do believe that those deep in the weeds right now will reap the benefits in 2023 and beyond. And that's kind of my time frame. Like, I don't have an edge, like pumping and dumping, like, not pumping and dumping, but like, just flipping these altcoins like up and down. Like, I just don't have the edge, right? And I don't want to participate in that kind of game. Like, what's the point? I'd rather just look for things that are here to stay. I'd rather look for things that have fundamental value, that is trying to, be the leaders coming out of the bear market, leaders in decentralized finance, technological innovations and whatnot. And those are the plays I'm focused on. And, I'm going to buy these things, I'm going to hold it, and, I'm not going to sell, right? Diamond hands. Hopefully I'm not going to be a meme. And hopefully I'm not going to be a meme. But, that's kind of how I view the markets. And that being said, just diamond hands and then hedging via other instruments. So that's how I view it. So that being said, I think so before I talk about Arbitrum and trends and coins and ecosystems to look out for, I'll just look into the questions and see if anyone has any. Let's see. Some questions for Arbitrum. I'll do that later. Reserve the Arbitrum questions for later. I'll just like talk about that briefly. Are you de-risking or accumulating right now? I am accumulating, but I did de-risk yesterday. Just because there was so much uncertainty, right? August 10th is the date for CPI and the Goerli testnet merge. Let's talk about the Goerli testnet merge. I think, is it this one? This one. So, this is like the last testnet merge before the real merge. And if this goes well, then the merge should happen in late September. But if some issues come up with this, then the merge might get delayed. And if the merge gets delayed, it's probably going to nuke the markets. To be honest, like it shouldn't really matter, right? Like if you think like 5 years from now, are you going to be like a kind of guy that said, oh yeah, I sold all my Ethereum because the merge got delayed by 2 months, right? It doesn't really make any sense. But on a short-term basis, whether like how this merge happens or how this merge goes, I think has some potential downside. But I'm not really worried about that. I think it'll be totally fine. Right? They've been testing this for like for many months. Let's see. What's my reason for providing liquidity in a bear market against staking? The thing with staking is that staking isn't, you're not really earning more coins by staking, right? Because think about it, like if everybody stakes a coin for like 10% APR, everyone earns tokens at a 10% APR. So you're not really increasing your share of the total pie. You're just getting more tokens, but everyone's getting more tokens. So you're not really increasing your net worth, right? It's kind of what happened with OWN, right? Like everyone's gaining more tokens, but everyone's getting diluted equally. Of course, if you're like, doing like staked ETH, staked MATIC, then maybe you can like you can auto compound that into coins and whatnot. But, generally like, and I'm not even being a liquidity provider, to be honest. Like I'm not a huge fan of being an LP. I guess GLP is kind of being an LP, but it's more of like a yield play, right? I'm like buying this asset comprised of like stables and majors that earn me GMX and AVAX. Let's see. Hold up, I'll talk about GMX too. There seem to be some questions. Let me open it up. So I guess the question is, this target weight and the actual weight is never the same, right? Because right now the target weight for stablecoins is 50%, but right now it's roughly 61%, right? Because there's just like a bunch of stablecoins in there. So how the protocol tries to balance it out is that, you know, if you're trying to deposit more stablecoins into this, then it'll charge you a higher fee. So DEX aggregators like 1inch should incentivize more people to, you know, reduce the amount of stablecoins in this pool, and that's how it gets to equilibrium. But it's never going to be the target weight. I just use the target weight just because, you know, whenever you're like, if you're watching this video like 4 days from now, it might be different, and it's like a simplified way to explain it. But yeah, that's kind of how it works. Let's see. Thoughts on whether ETH proof of work will underperform or outperform proof of stake? I mean, you know, the miners are shilling, the miners and exchanges are shilling the proof of work chain, but it's going to be worth like probably like 3% of Ethereum's market cap. Thoughts on Juno? I'm not a huge fan of Juno. They're trying to be this like this launchpad L1 for Cosmos ecosystem projects, but if you look at the historical performance of launchpad projects in all of crypto, they just go to zero, right? Like there's no value accrual for the token. So I don't think Juno should be going in that direction, but I mean, I don't know, like I'm not a dev, right? I feel like it's not that great. Why GMX on Avalanche instead of Arbitrum? Just because I've been farming on GMX on Avalanche like since the beginning of the year. So I have a bunch of escrow GMX. So, you know, I'm prioritizing like unlocking that. But if you're starting off for the first time, you should just definitely start on Arbitrum. It has better returns. Let me find this article. So give me 1 minute. Not this one. I think it's this one. This one here. Okay, so Coin Data School, he's a good follow on Twitter, good Substack too, but he kind of did some data analysis on how the growth of $10,000 invested on GLP Arbitrum and $10,000 on GLP for Avalanche. And he did some Monte Carlo simulations, and you know, if you backtrack the data and you know, you assume, you know, if you like run some Monte Carlo simulations, right, GLP on Avalanche will just tend to do worse than GLP on Arbitrum, just because Arbitrum is mostly comprised of Ether, and Ether has outperformed Avalanche. Of course, he's, you know, I think GLP launched on Avalanche, you know, beginning of the year, so you know, Avalanche has been kind of down only since the beginning of the year, right? So past returns doesn't really signal future returns. But I do think that if you are farming GLP for the first time, you should definitely do it on Arbitrum. That's what the data suggests. Okay, I think that's enough. Let me go through the questions. FXS, I'm staking on Convex. CVX, FXS, and FXS. The ETH proof of work fork. So there's something interesting that you can do. So the idea is that if you think about the Bitcoin Cash fork in 2017, anyone that held Bitcoin got a bunch of free Bitcoin Cash forks. Bitcoin Cash tokens, because they forked the chain, right? And if you held Bitcoin, you also got Bitcoin Cash. So a bunch of Bitcoin maxis said, oh, thank you, I'm gonna dump my BCH to buy more Bitcoin, right? So it's kind of a free airdrop. So what you could do is, leading into the merge, if you're comfortable with the risks, you can just hold Ethereum in your wallet, and you should get the proof of work coin, you know, in the proof of work chain. I think likely that token is going to be worth like 3 to 5% of the Ethereum market cap, because if you go here, yeah, so like ETC is like what, 5 billion, right? And Ethereum is like 200 billion. So ETC is 4% of Ethereum's market cap. And like, who the hell uses ETC, right? It's just like it's just a way for speculators to trade and for exchanges to make money. So, you know, I think it's reasonable to expect the ETH proof of work coin to maybe get like 5% of Ethereum's market cap, which is not a zero, right? So I feel like it could make sense to maybe take out your ETH from other chains and just bridge it back to mainnet just so you can get that. If it's worth 5%, if you hold like 10 ETH, then you might get like 0.5 ETH worth of value if you hold this coin and like dump it for Ether later on. And one thing you could also do is that, for example, let's say, let's go back here. Let's say you have like, let's say you're an Avalanche, right? You have, I don't know, let's say USDC as collateral. What you can do is you can borrow ETH, wrapped ETH, the Avalanche ETH on AAVE, and then bridge that ETH back onto mainnet. And that way you can kind of increase the amount of ETH that you hold, that you hold on mainnet. And you're not really buying ETH, but you're borrowing ETH, bridging it back in order for you to hopefully get this airdrop. There's like bridge fees and like interest rates, obviously. So I'm not sure how attractive that's going to be. I think a bunch of people will do it. So I'm not really sure, to be honest, but that's one thing you can do. I think Stargate is good. I'm farming it. 100 Finance not coming back. Cosmos lacks value accrual. Interchain security is cool, but they, what is it called? Like for interchain security to actually have value, like there needs to be more consumer chains, right? Because the idea is that these newer chains can launch and they can inherit security from the Cosmos hub, right? Atom staking. So if you stake Atom, not only do you get more Atom, you can also receive other L1 tokens. But like, I don't think anyone like that. Not that many people are, just building on Cosmos right now. I think Osmosis is really cool though. I think Osmosis is very, very cool. But anyways, enough Q&A. I'll answer more questions later. But okay, so I guess back to the mindset that I was talking about. Coins, trends, ecosystems to look out for. Obviously, I'll talk about Arbitrum, but let's kind of think about how markets bounce back from a bear market. And I'm going to use Avalanche as an example, right? Obviously, 12 months ago to today, like conditions are totally different. But I do think that you can look at history to kind of infer what should we look out for if we're looking for things that do outperform in the future, right? So this is Avalanche, right? The price of Avalanche from late 2020 to late 2021. And I mean, I was like tracking Avalanche back in early 2021, and it had this crazy pump. Like I have no idea why it did this. I think they launched mainnet, and I think there was like some token unlock thing. But like it went from like $4 to like $60. It was absolutely insane. And then, like everyone's like, wait, like nobody uses Avalanche, right? Like this chain kind of sucks. And then it's just like nuked. And then there was actual accumulation, and then Avalanche Rush launched, and then it was like up only from there, right? It went from like $15, like from 12 months ago, like to the dot, to like on like $150. Right? It was like a 10x on like this pretty liquid coin, which was pretty cool. And it's unlikely we get like this exact copy of Avalanche, right? I mean, like people are leaving crypto as a scam, whatever. But I think a good sign of future outperformance are charts that look like this, where you get capitulation, accumulation, grind up, right? Capitulation, accumulation, you grind up, and at some point there's like some big news, right? The Avalanche Rush incentives, and then bam, right? Green dildo, right? Hockey stick. And if you simplify what happened with Avalanche, right? It pumped a lot for some reason in early 2021. It doesn't really matter what the reason was, but you can look back on many charts. But every altcoin that has like its hype cycle just pumps a lot for like whatever reason. And then it nukes a lot because no one uses it. Same case for Avalanche, same case for a bunch of other altcoins, right? Like things just pump because it's like, oh, something's launching, it launches, and then no one uses it, and it's just like nukes. Avalanche only pumped back again because people started using it, right? Like what a novel concept. Pumped a lot in anticipation of people using it, nuked a lot because no one used it, and then actually pumped because people used it, right? Like, so that's, I feel like is a good framework for how to think about what to buy right now. Is like, I feel like it's less important to look at past data, like past TA, right? Past price action, when there's like not that much usage. I feel like it's more better to think about, okay, what's the product? Does it have product market fit? And will people use it, right? That's kind of the mindset. And I think Arbitrum has a reasonable chance to be the next Avalanche. This is kind of clickbait, not really clickbait, but like I'm not expecting Arbitrum to 10x the token itself, right? I mean, nobody even knows what the Arbitrum token is going to be. But let me kind of go over like my explanation on why I like Arbitrum and why I don't like Optimism too much. So this is the top 9 in terms of layer 2, or just chains in general, in terms of TVL. And Arbitrum has almost $1 billion worth of TVL with no token. And every other ecosystem has a token. Optimism, I think, had like $200 million of TVL without a token, and then they have a token, and then people rush in, right? But all these tokens, all the top 8 chains have a token, and that's one of the reasons they can gain TVL, because they can incentivize liquidity. Arbitrum, almost $1 billion worth of TVL without a token. So what's going to happen if they do drop a token sometime later this year, hopefully? I think once the Arbitrum token drops, I think it's very reasonable to expect them to be a top 5 chain by TVL, right? Because top 5, I mean, Solana, right? 2 billion. I feel like it can definitely get that. And Solana had like that news of like this one dev, spoofing a bunch of TVL. And I feel like the Solana chain is like, I feel like it has a future, but DeFi there sucks, right? You just get dumped on by VCs, right? That right? If you want to get dumped on by VCs, if you're a masochist, you go to Solana, right? That's kind of the use case for Solana. So I think it's reasonable for Arbitrum to flip Solana, even flip Avalanche. Flip Avalanche. And, if you think about the Optimism ecosystem, I get a lot of questions about Optimism, and I kind of joked about Optimism a lot, right? It's like, they called it, I'll talk about it. Yeah, anyways, Optimism gained a bunch of TVL from the short-term incentives, right? Like AAVE dropped $5 million worth of incentives for OP. People rush in, people loop, and then they accumulate these OP tokens. But I don't really expect the TVL of the Optimism ecosystem to be that sticky, right? I think Optimism ecosystem is fairly valued for the most part, and I think the risk reward for buying things in that ecosystem is not that great. And maybe you can say that I'm coping because I missed out on Optimism, right? At least like the pump from the recent pump. But it's not about whether I missed it or not. It's not about what it did. It's more about what is it going to do in the future. And I don't really think that the risk reward is there. And one of the things I want to share is the Optimism ecosystem. There's like no synergy, right? It's like these individual projects that just came for Optimism because it's like this ETH layer 2. And they've just forked their project onto Optimism to get these token incentives. I feel like the majority of Optimism projects are just projects on Phantom that left Phantom so they can get OP token incentives on Optimism, right? And the team can, hold some of that token, sell it. Maybe the token price for their team goes up, so they can, they can make money that way. But I don't really see longer term builders on the Optimism ecosystem aside from synthetics. And I'm not even a huge fan of synthetics either. So, Alex Cutler.eth, Wagme Alexander, he works for Velodrome, right? The #1 DEX on Optimism, right? The solidly fork. They were on Phantom, and then they were like, screw Phantom, we're gonna fork it on Optimism. And they were kind of, stirring up some battles online, right? Some good CT drama, right? Crypto Twitter drama. And they're like, Curve sucks, right? Velodrome is the shit, right? We're the Optimism DEX, no one should use Curve. Why is Optimism even giving Curve incentives? We're the #1 DEX, right? They were come at me, Curve, right? And then Kane, obviously been a supporter of Optimism, layer 2 adoption, builder of synthetics, a very well-respected builder, is bro, what the fuck are you talking about? You're shit talking Curve, right? They are the DeFi OGs, they've added more value than you are, and literally the #1 and #2 project is just battling each other, right? It's Kane's shut up, you ain't shit, you ain't shit. I find this to be so tone deaf, it's shocking. Focus on your shit. And I kind of do agree. I kind of like this guy. I think, I do think he's a good builder, to be honest. But, I feel like there was just stirring up crypto Twitter drama just so they can get more impressions on their own protocol, which might be a good thing, to be honest. But, is this what I want to invest in? Not really, right? What the hell is going on, right? I'd rather invest in this ecosystem that kind of works together, right? If one project does well, this other project will do well, right? I kind of like this positive sum thinking when it comes to, deploying capital on particular chains. It's one of the reasons why I bought FXS, right? It's Curve, FXS, CVX. They're kind of fostering this positive sum thinking where, people are building on top of one another, and if I benefit, you benefit. If you benefit, I benefit. And it's kind of like this. It's kind of like this idea of DeFi Lego blocks, right? Where people just build on top of one another, and more value accrues to the base layer. And from a consumer perspective, it just makes for a better user experience. But this, it's like, bro, like what the hell is going on, right? And not to mention, Optimism team, they call their investors sugar daddies, right? Or sugar zaddies. So I don't want to buy into this, to be honest, and I'm gonna get dumped on at some point. And I feel like the Optimism TVL is not that sticky. I'm not gonna compare this. Actually, let's skip that. That's kind of disrespectful to Optimism. So the L1/L2 playbook, which I guess I popularized last year, but it's like this idea of rotations, right? Where token incentives means that people bridge. When people bridge, part of that TVL is used to buy tokens. A bunch of people ask me, like, why are people buying Optimism when you don't use it as gas? There's like no staking. Well, think about it. If, let's say, $1 billion worth of TVL enters an ecosystem, right? And most people are going to bridge stables, Bitcoin, and Ether, right? That's basically what people bridge. If even 5% of that capital is used to buy up the native ecosystem tokens, prices will go up, right? All these altcoins are so illiquid, it's going to go up. It doesn't necessarily mean that there's good reasons to buy that thing, but people want to speculate, people want to farm, and that's kind of what happens. It's like back in the MATIC days, MATIC went up like 20x, and people were asking me, like, why is MATIC going up when like gas is so cheap? Well, no one is buying a bunch of MATIC on exchanges, on DEXs, because they need it for gas, right? They just want to speculate on the hype, right? And they want to pair MATIC with like some random altcoin, like Iron Finance, and like farm the pool 2 or something. That's kind of how it works. So, a percentage of the TVL bridged is used to buy tokens, then tokens go up, then hype builds. And the question is, the hype can last like many weeks or even many months, right? Like Avalanche Rush, the hype lasts many months. Right now, I'm not sure how long this hype is going to last, but the question is, like, when the hype dies, when the token incentives get used up for the most part, what's going to happen, right? Will people stay or will people leave? And I think the most of the Optimism hype has run its course until long-term minded native projects launch, that aren't just moving to Optimism for the token incentives. Like I mentioned, the majority of the projects on Optimism are just projects that moved over from Phantom, and I don't necessarily see that as a good thing. Of course, maybe it's good for Ethereum because, all the builders are, coming back to ETH, right? From other chains. But, is it good to buy Beats, Taro? I don't know. I really can't make a good case for buying these Optimism tokens. But who knows? Maybe I'm coping, right? I'm more than happy to cope. And then you might be asking, what makes Arbitrum different, right? It's just an L2. Yeah, it doesn't have a token, but sure, they can launch a token. They can do incentives. People will bridge, but what's going to stop them from not bridging back? And that's a valid point, and I really can't look into the future, but I do think that the Arbitrum ecosystem is more mature and better developed, and the builders on top of Arbitrum are more longer term oriented than the people on Optimism. Aside from King, I think the Velodrome team, they are longer term minded, but they have a lot to prove basically. But Arbitrum has been around for much longer. There have been teams on there that's been building for like basically a year. And they are going to continue to build, and I think that's where the majority of the opportunity is. I think right now, if you want to gain exposure to L2's, it's going to be in Arbitrum ecosystem, Arbitrum based projects essentially. And one of the things I like about this ecosystem is that all the projects are working with one another and building on top of one another. It's kind of like what I said about FXS, CVX, CRV, the Curve ecosystem, right? All these projects are building on top of one another because they all like Curve, and that's kind of the mentality within the Curve maxis, right? It's this positive sum thinking. And it's the same for Arbitrum. There's a bunch of these projects which are some are doing novel things, some are not, but they're building on top of one another. So if one protocol benefits, another benefits as well. And it being top 10 in TVL without having a token is already a leading indicator for just active users, a more developed community, and just engaged devs in general, right? So when they launch token, it's just going to do well. I think it's going to be top 5, to be honest. And this is the top 18 projects on Arbitrum. right? I mean, most of them are cross-chain. Of course, every chain is going to have their Sushi, Curve, Uni, Stargate, Synapse, Beefy, AAVE, whatever, right? But it's better to focus on these native projects like, Umami, JonesDAO, Vesta, Dopex, Radiant, GMX. So let's kind of go over some of. I'm not going to cover all of them, but I'll go over the most. I'll cover some of them that are like working with one another. So Umami Finance. I'm going to kind of speed through this. I'm not shilling any of these. I don't own any of these tokens aside from GMX, FYI. But Umami, right? It creates this yield product where you deposit USDC, and the protocol itself will buy GLP with your stablecoins, and then it'll hedge the volatility of the volatile assets within the basket using TreasureDAO's products. So if more liquidity comes into Umami, then GLP benefits because it makes GMX, the platform, more liquid. And then TreasureDAO gets more usage. So, hey, positive some thinking. I like that. Dopex, decentralized options exchange. Team continues to ship and has one of the strongest communities out there. I have no idea, okay, maybe I do have an idea, but if you join the Dopex Discord, I have no idea what's going on, right? Like, I post a question and then, people are like posting memes of like Pepe's like making out with each other. Like, I have no idea what's going on. But the fact that there's so much engagement makes me believe that, okay, these people have held since the top, and they're here to stay, right? They're here to stay. And once token price starts to go up, they're going to go on social media and they're going to show the hell out of their tokens, right? It's strong community. And if you, I actually suggest everyone join their Discord. And if you want, pure alpha, just go to the top and look up all the messages from TZ Talk Chad, who's the founder. He's the founder. He's super engaged. He's always sharing. One gripe I have with Tetranode projects is that I think the hype to fundamental ratio is more skewed to the hype side historically. So I never was a fan of Tetranode incubated projects, but I feel like after the price is down so much, maybe it is good to have Tetranode as an advisor because I don't know, he'll show it to their audience or something, right? I don't know, but Tetranode, you can question his ethics, his morality, sexuality, whatever. But he is a very smart guy, right? He understands how DeFi works, and I'm sure that he's a net positive in the ecosystem. Good team, I think, good team. JonesDAO, right? I mean, Dopex is its own product. They're also building Atlantic options. I think they're building a product where in the future you can leverage long Ether on GMX, and then the protocol will buy puts for you. So that position will never be liquidated. Don't quote me on that. I think they're building stuff like that. So, maybe they're also building on top of GMX, potentially. JonesDAO, automated strategies for Dopex. TVL is down only, price is down only, but if Dopex benefits, then there should be more usage for JonesDAO, right? Positive some thinking, building on top of one another. Plutus DAO is like this convex of Arbitrum, governance aggregator. They accumulate VE DPX, VE Jones, VE SPA, and they're going to work with GMX and create more GeoMX and GLP yield products. So, hey, if Dopex does well, then Plutus does well, GMX does well, maybe Plutus does well, JonesDAO does well, SPA does well, SpearX as well, Plutus benefits, maybe this could be interesting. Yeah, SpearX, decentralized stablecoin backed by Vesta for X, right? Vesta is the Arbitrum native. It's like this abracadabra / DAI, MakerDAO fork, kind of. And they also partner with SpearX, right? And they used to have their stablecoin backed by USDC and Tether, but they were like, what? Screw Tether. We're gonna go for Vesta and Frax because decentralization, right? Even though nothing is decentralized. So that's kind of cool. And then Vesta is an over-collateralized stablecoin. You can use BTC, Ether, Ohm, GMX, or DPX as collateral, so you can get liquidated when markets dump. So it provides some major use cases. But the point is, not all these projects do well, but once these dApps are incentivized with the Arbitrum token, whenever that is going to be, I feel like network activity should pick up and everyone should benefit, right? If GMX experiences more activity, then that means that more people are using the chain. And if more people use the chain, then that just means that, the entire network should benefit, right? And if more people deposit into Umami, then it makes GLP more liquid, which makes it a better trading platform because it'll be more liquid, right? And stuff like that. None of this partnership and none of this is incentivized, right? These projects are just building on top of one another just because they like each other's product. And I feel like once they do have a token, this ecosystem is going to do really well. The thing is, I don't know when the token's going to launch. If the token launches like January of next year, and you buy these tokens, you might just be like waiting for like 3 months, just like underperforming like GLP or something. So that's always a risk. But I do like this positive thinking, this idea of working together. And if L2 season is real, I think Arbitrum should benefit. Potential downsides, they had this event called Arbitrum Odyssey where there were like weekly tasks. If you completed it, you get some NFT, maybe tied to an airdrop. I was doing it, and then week 2, a bunch of people tried to use GMX. The chain went down, so they had deposit. So maybe the network doesn't scale. That's always a risk. It's unproven, right? Arbitrum Nitro is going to launch on the 31st, and that should improve the user experience, lower gas fees. So I'm super excited about that, but we'll see, right? It's still very unproven. Arbitrum Nova launched though, and Arbitrum Nova is like this other chain. It's not a layer 3, but it's like this other chain like under this Arbitrum umbrella. It's more focused towards gaming and metaverse stuff, I think. Socials, they're partnering with Reddit, right? And the gas fees there are super cheap. Someone did a transaction and it cost like 10 cents. I mean, not that cheap, but in the grand scheme of things, it's pretty cheap, right? For Ethereum, right? For Ethereum native stuff. So they partnered with Reddit. Sushi is live. I don't know what the liquidity is. I know someone that like got a bunch of like Reddit tokens because they used to shitpost a lot on Reddit, and they were able to dump those tokens for like 1 Ether. Like I don't even know if that's real, but apparently that happened. FTX is also going to support direct onboarding onto the chain, and many more projects are in the pipeline. Direct onboarding, pretty cool. I think one of the reasons Solana did well was because FTX allowed direct deposits for their bags. And you can use the Arbitrum bridge, and they're saying Arbitrum Autumn, right? It went from L2 summer to Arbitrum Autumn. Maybe it's real. August 31st or Nitro should launch on August 31st. And if they do launch, then Arbitrum Odyssey should resume. It's a 2-month program, so maybe Arbitrum Odyssey launches in October, ends in mid-November, and token drops January, maybe. But something to look out for. Yeah, I feel like the setup for Arbitrum is pretty obvious. I feel like it's like once they have a token, I feel like it's going to be a top 5 chain. I don't really see an argument against that, unless Nitro is pure garbage. If Nitro is garbage, then yeah, like I'm totally wrong on this. But I feel like it's pretty obvious. But the problem is the timing of the token, right? Like if the token gets announced in December, then from now to then like you're just like back holding random altcoins, right? And I don't know, seed investors dump money or something. Because being too early is the same as being wrong. And I talked about some projects. I can answer questions about my thoughts in more detail later. I only own GMX right now. I don't own anything else, even though I am looking to look for things to buy, right? Maybe Dopex. I feel like everything I've purchased recently has the letter X in them. So maybe it's X coin season, right? X coin season. Who knows? Summary, my plan, right? Just wrapping it up all together. My plan is to build out ETH DeFi plays into Arbitrum beneficiaries that's going to outperform Q4 and beyond, in my opinion. Maybe Q4 is too soon, 2023 and beyond. If worried about downside, I'm not going to sell my altcoins unless the fundamentals are like pure trash. I'll hedge with majors or, do the GLP thing that I did earlier. And if the S&P closes above 42.31, it gives me more confidence that the indexes are not going to put in new lows. And given that I think crypto capitulation has already happened, I think that even if the S&P just ranges between, let's say, 3,800 and 4,300 or like whatever, right? If it just goes sideways, I just feel like it'll give crypto a room to run. So I'm going to be just looking to be in this dip buyer mentality. It doesn't mean that everything is going to be up only. In fact, I expect choppiness, which I think is one of the reasons why GLP is so good, right? Like you get the profit from all the trading fees and whatnot. That's kind of how I view it. And yeah, that's the end of the presentation. So hopefully that was useful. We're already an hour in, but given how I've barely answered any questions, I might go for like half an hour more in case people are interested. Let's see. Let me scroll up. Let's see. Dino swap. Yeah, good times, huh? Let's see. I don't even know any of these tokens people are saying. Why does Arbitrum need a token? Well, think about all the VCs that poured like 9 figures into Arbitrum. How are they going to cash out? Are they investing that much out of the kindness of their hearts? No, they're buying it so they can cash out, right? Why does Optimism need a token? They really don't, right? Why did the sugar daddies invest in Optimism? Just so they can have these tokens and slowly sell over time. So they're gonna have a token. Like Optimism is gonna have a token. Let's see. Yeah, I mean, just L1s in general, like, am I bullish? Like, Solana near, Suyap. Like, the thing is, the way I think about it is, I don't think these alt L1s can outperform. I mean, they can outperform ETH, but from like a risk-adjusted return perspective, I don't think that it's good to hold these alternative L1s right now, because I just think that activity on their chains won't come back until Ethereum gas fees pick up in a sustainable manner. If you have like a 12 months time horizon, then yeah, like buying Solana right now probably totally fine, right? And it might totally outperform Ethereum. But in terms of like order of operations, I'd rather focus on Ethereum projects right now. And once more activity comes back, NFTs, whatever, then gas fees will go up, right? And maybe it's above 50 Gwei for like 3 weeks, right? And then it prices people out, and then people are gonna spill over to alternative L1s, right? And by that point, hopefully these ecosystems have a more fleshed out ecosystem, and then they can benefit. But right now, I'm just pure ETH maxi mode right now, to be honest. I'm okay if other things pump. I'm just like, the thing is, like, I'm just like focused on like at least a 4-month time horizon, right? Like 4 to 5 month time horizon, right? I'm just like thinking about, okay, imagine myself, right? I'm manifesting this. I'm manifesting this. Like 6 months from now, right? What would future Taiki, like what would 2023 Taiki want 2022 Taiki to do? What would he want me to do? And I think he would want me to buy altcoins that have strong fundamentals and just enter a coma, right? I think that's what 2023 Taiki wants. So I'm like, you know what? I'm gonna do that. But of course, I'm in the markets every day, so I'm always gonna be like, like there's FUD. They're like, ooh, that's scary. So, just so I can maximize like my sleep adjusted returns, I do stuff like hedging and whatnot. But generally, I'm just like, thinking about mid to longer term, if that makes sense. No one knows how the Arbitrum token is going to be. Just do Arbitrum Odyssey when it resumes. It's going to be a 2-month program. Let me find this. This one. I found it. Okay. Yeah, so this was. Can I zoom in? Yeah. So this was the thing. They paused it here because the chain went down, kind of, or it didn't go down, but like the gas fees spiked up. So everyone tried to use GMX and it kind of went down. So once it resumes, it's probably gonna be like this program where over the course of the 7 weeks, people will like do these activities. So I did this, right? I bridged via Hop protocol and I got some random NFT. That's cool. And it's not really like, it's not confirmed, but I'm just gonna do everything, collect my 16 NFTs, and then hopefully get more Arbitrum tokens if that's how it works. Let's see. Sorry, I'm just catching up on the chat. I don't think like buying GMX or DopeX is going to be eligible for an airdrop. I think it's going to be similar to Optimism, where people that get the Arbitrum token airdrop is probably going to be people that vote for governance on ETH layer 1. like people that held Convex and voted on bribes, they all got airdrops, right? Optimism, pretty cool. Optimism token airdrop. Also, anyone that donated on Gitcoin on mainnet got an airdrop. I was kind of pissed about that because I donated to so many projects on Gitcoin on ZK Sync layer 2, and just because I wanted to use lower gas fees, I was not eligible. So I was kind of pissed about that, but stuff like that. And then probably Arbitrum Odyssey, one thing I was doing earlier this year is I was just doing one transaction on Arbitrum once a week. So swapping $10 of USDC into Ether into USDC, and just doing that once a week. But I feel like it's super easy to game, and I feel like these projects are getting smarter about how they distribute their tokens. So I have no idea actually, but I'm just doing all I can. Let's see. MATIC on Arbitrum, TreasureDAO. So let's talk about that. Let's actually, what is this? Okay, TreasureDAO, right? So one thing you can think about it is that I feel like when people think about, okay, so this is this has less to do with fundamentals, but more from a trading perspective, right? When you think about Arbitrum, what do people think of, right? Just imagine you're on Twitter, right? And you do some random quick interview with someone. It's name 3 Arbitrum projects, go, right? You just tell them that. I feel like the majority of the answers are going to be GMX, Dopex, and MATIC. So I feel like if people bridge to Arbitrum, I feel like those tokens will just go up a lot by nature, just because people are the most familiar with it. So it's got fundamentals in that aspect. Fundamentally, I'm not a fan of this. The idea is, it's this ecosystem of a bunch of games that use MATIC as this currency that every game shares. You're trying to create this gaming metaverse ecosystem around the MATIC token. And in this utopian world, in this utopian world, all these games are great. Everyone uses MATIC to buy NFTs, and MATIC go up. But in practice, let's think about this rationally. If you're a game developer and you're super good, right? You're a qualified game developer. Qualified game developers are just going to raise money from VCs directly to launch their own game. So the type of devs to launch on MATIC, I think on average will be lower quality than the game devs raising by themselves from VCs and seed investors directly. So I like this concept of creating this decentralized Nintendo. That's kind of their idea. But I think in practice, the products that are going to be built on top aren't going to be as good as people want it to be. So the hype to fundamental ratio, right, as I always say, is more skewed to the hype side. So it can definitely pump a lot. But I don't think it can be sustained because it will be sold into. That's how I view it. I could be wrong. Let's see. What's my skincare routine? What is my skincare routine? I used to have a lot of pimples, but I think turning 26 made my skin better. But wash my face every day. I don't use a pillow actually. Maybe that's good. Is that weird? I don't use a pillow. I used to have back problems, so now I sleep on my back. No pillow, right? Pillow FUD. Maybe that's weird, but I sleep well. And I feel like one of the reasons people get a bunch of pimples is because they don't clean their pillow sheets, and there's a bunch of bacteria on these pillow sheets. What am I talking about? Okay. Yeah, Jack, don't distract me. Okay. I don't know why people like MATIC so much. I feel like, I don't know, like these people like promoting MATIC, have they ever used chain? Right? That's kind of the this idea. But I mean, I'm not against MATIC. I think that team is pretty strong. I think they have great intentions. Their business development is insane, right? They like have all these headline announcements. But what project is on MATIC that's exciting? Maybe Gains Network, right? But Gains Network is just like a poor man's version of GMX. I'd rather just like hold GMX, like. That's on privacy, especially the Tornado Cash stuff. Thing is, maybe this is the incorrect way to view things, but I feel like privacy is important, but the market doesn't really value privacy, right? Think about privacy-based companies in the stock market, right? Privacy is important, but they're not that highly valued. So similarly, can privacy tokens in crypto catch a premium? Monero never does well, Zcash never does well. Same can be said for like file storage companies, right? Like Dropbox is like not worth that much. It's like, why should a Filecoin be worth more, right? AAVE. But maybe the Web3 version is so much better. I don't know. It's like, I don't really have an edge valuing privacy tokens and like the valuation models based on usage. Like, I'd rather focus on like what I'm good at, which is like DeFi related stuff. Yeah. Do I think June, July was actually the cycle bottom? And I mean, I guess I kind of answered that question earlier, but I do think that if the S&P closes above 42.31, I think history. Sorry, let me just delete this. I'm pretty sure that if this is able to close above 42.31, it gives more confidence that we're not going to revisit those lows. And if we don't revisit those lows, I don't think crypto will put in also. I don't think crypto will also put in lower lows. I think the most likely scenario is this, like whatever that is, and also like this. I mean, not this particularly, but something along the lines of this. I think it's just better to assume that it's not going to be up only. Like, have a long-term time horizon, 2023 beyond. Like, we're probably not going to pump until then. So if you're on Twitter, everyone is like saying like, oh, I bought the bottom, haha, you're so stupid, then markets go down, it's like, haha, I sold the top, are you stupid, haha, right? Like, everyone's like that. I think Twitter, social media, most people suffer from short-termism, which is fine, right? I mean, you're with your friends, you talk about what's happening right now, right? It's like, oh, like whatever. But for the most part, because if you think about trading as a zero-sum game, but if you're on DeFi or just decentralized exchanges, not only is it a zero-sum game, but also it's a negative-sum game because you pay fees, right? You pay gas, you pay DEX fees, 0.3% fees, you pay slippage, which might be like 1% up to, right? Depending on how liquid token is. And there's like some MEV on all chains. So if that's going to be the case, I feel like it's just better to minimize the amount of transactions you do on chain and just build a conviction and like stake it somewhere, right? just stake it somewhere. I mean, obviously, like if the token sucks, then yeah, like you're just better off like dumping it. But hopefully the tokens I'm buying is not complete garbage. Hopefully. See. Yep, DAOs are crap. BNB chain, I like CZ, I like Binance. I think BNB will do well, to be honest, but it's too high a market cap. I don't really care for it. Books to recommend. I like The Almanac of Naval Ravikant. That was a great book. I like, what was it? I like Fooled by Randomness by Nasib Taleb. That guy is anti-Bitcoin, but he's a great writer. I like those books. Anyways, I think I'm done. I think the majority of the questions are, it's kind of over. Thank you guys for watching. Hopefully this video has been helpful. Let me know what you think. Yeah, just give me feedback. Maybe in the comment section. I'm trying to boost my metrics, but my metrics are down bad anyways, right? I mean, look at this. Look at this. My God, I lost 50 subs last live stream. God, this is so bad. Maybe I'll lose 100. Maybe I'll lose 100 subs. It's funny because I think I peaked at like. Let me check. I think I peaked at like 96,000 subs or something. Hold up. Let's see. What did I peak at? I don't know if there's a way to check. Kind of does daily subs. But anyways, I was like 95,000 subs, and it's like, oh damn, like 100K almost. And then every time I upload a video, I lose subs. I mean, I don't really care about subs anyways, but I mean, if I cared about getting to 100K subs, I would probably be doing hot dog faces on my thumbnails, right? So anyways, thank you guys for watching. 100K subs or 90K subs first, maybe 90K. Yeah, but anyways, thank you guys for watching. Have a good one. I'll stream again tomorrow. Might be Monday though. Wednesday is kind of rough for me, so I might start doing it on Monday. But I don't know. We'll see. We'll see what happens. So bye bye guys. Bye bye.